Okay guys, just wanted to talk through a solution for Top Spot Holiday Resort. This is our interpretation and evaluation practice question. So yeah, just wanted to, I didn't give you a solution in class for this one. You sort of just work through this one by yourselves a little bit with the promise that I would do this for you. So the task. Okay, quickly go through that. First of all, Top Spot Holiday Resort own a jet ski and powerboat. They record all expenditures for these items on separate property, plant and equipment registers. These records are then used to prepare an equipment account in the ledger. As a sample of how they record expenditures on assets and write-off depreciation, they have provided you with their records for the jet ski and powerboat. They're also concerned with where and how to record the cash that they set aside to replace these assets at the end of their use. This is something that you answer in the cost allocation concept paragraph, that we're not actually setting aside cash. Okay, they seek your analysis and interpretation of these records and ask you to provide advice and recommendations in a report of 600 to 800. So that'll be grade 12 word limit, 500 to 700 for the grade 11s. And you're discussing and evaluating cash recording, capital expenditure, revenue expenditure, calculation of depreciation, method of depreciation, effect on profit. Now these, and there's our PPEs for the two assets. These will be on the exam. Okay, so these good little prompts. These will be the headings for your report. So the questions to ask yourself as we go through this. In this particular question here, the questions to ask yourself are: 1. Are revenue and capital expenditure expenditures treated and classified, rather than treated, are they classified correctly? Okay, is the most appropriate method of depreciation. Oh jeez. Use for each asset. And has depreciation correctly calculated. These three questions form the basis of your analysis. Okay? Revenue expenditures, revenue and capital expenditures, are they classified correctly? Has the most appropriate method been used? Has depreciation been calculated correctly? And you just saw how painful it was to watch me type all of those. Thankfully, in your report, I've already pre-prepared it tonight so that you don't have to listen to me think out loud and try and type and backspace and type and backspace and all of that. So, it's already done. That's the basis. So let's move on. Okay, so we're looking at our PPEs. First things first, have revenue and capital expenditures been treated correctly? So here's our powerboat. There's its cost. That's fine. Additional seats for $5,000. They would be considered a capital cost. They are an extension or an improvement to the asset of a significant value. So yes, that has been treated correctly. We leave that there where it is. Okay. We come down this list here of repairs and maintenance, otherwise known as, these would be revenue expenditures. And so repairs to engine, yep. Service, yep. Replaced anchor, yep. Service, these are all revenue expenditures. It's this one here, insurance during transit. We know that capital expenditure, the definition of capital expenditure, is costs that result in the acquisition and installation of an asset whose life will extend over more than one accounting period. So it's resulted in the installation of the asset. This is insurance to get it from A to B and ready for use. This amount here should be up here and getting added to these figures. So therefore, our total asset cost should be 116,600. 116,600. Sorry. Sorry. Looking at the correct column, the original cost of the asset, we're looking at the exclusive of GST figure, so that should be $106,100 as our original cost once that goes up into here. Okay, 106,100. So that's treatment of revenue and capital expenditure in this one. Okay, we scroll down to our jet ski. And here we've got looking at revenue and capital. Okay, jet ski cost, fine. Yearly insurance premium, as we know, yearly insurance, it's not the cost of insurance to get it installed ready for use. This is the insurance that we pay from year to year. This one should be revenue expenditure. This should be down in here. Okay, taken out of our asset cost, put down into this section here. Safety harness, bought on the same date as the asset. I think I said in class, we'll leave this down here, but looking at it, safety harness, it's an attachment to the jet ski, bought on the date of purchase. It's of significant value. So I've changed my mind, and I think this here should go up into there. All right, so this 800, 3,000 coming out of the original cost and down into here, 880 going up here into the original cost. So our original cost of our asset, excluding GST, becomes 50,880. Okay, and then so our three questions, that has capital and revenue been classified correctly? We've gone through that. Is the most appropriate method for depreciation used for each asset? So from our knowledge, okay, assets that have moving parts and tend to depreciate not in a uniform fashion, we claim more depreciation early on in its life compared to later on in its life. Those assets with moving parts, we should be using the diminishing value method. So we can see for the jet ski, okay, diminishing balance, diminishing value method, correct with this one here. Straight line is more appropriate, as we know, for buildings and furniture and things like that. So for a powerboat, we should be using the diminishing value or diminishing balance method. Okay, so we've answered that question. We'll need to write about it in our report. And then, has depreciation been correctly calculated? So based on our changes, we can go and look at this now. Based on the figures that we've got here, if we were to stick this into our calculator, 105,000. So if we did 105,000 minus original cost minus residual minus 14,000 equals, divide our estimated useful life of 4 equals 22,750. Okay, so straight line method, that's been calculated correctly. That's therefore been calculated correctly. And then for this third year, we've depreciated up to our date of sale. It was disposed on the 30th of September. So we've depreciated it for 3 months of the year. So if we get this 22,750 times 3 months, July, August, September, divided by 12 months in a year, we end up with $5,687.50, rounded up to this value. So with the information that they're given and the way that they've classified everything and the method that they're using, depreciation has been calculated correctly. All right. However, we're going to go and revamp this in our recommendations. We're going to say that this should be up here, and this should be diminishing, and we'll calculate and compare that in our report. A jet ski, if we were to take 53,000 times 30%, you shove that in your calculator, 53 times 30%, you will get this figure. Okay? And then diminishing balance for year 2 then needs to be 53,000 minus 15,900 to get our diminished balance, or 53 minus accumulated depreciation. Okay, that gives us 53 minus 15,900 gives us 37,100 times by the rate, 0.3, gives us 11,130. So with the information that they've been given, or that they've used, and their classifications that they've done, their calculations are correct. However, we're going to go and change those. And so with this one here, we're going to add our 1100 up into here. And we're going to use diminishing balance. So I'm just going to chuck it here just for illustrative purposes. So powerboat, new calcs. We're going to have original cost of 106,100 times 30% equals 21,220. Double check that, 106,100 times 0.3. Oh, sorry, the rate is 20%. My bad. 20%. 106,100 times 0.2 gives us 21,200. Diminishing balance, we then have 106,100 minus 21,220. We end up with 84,880 times 20% equals 16,976 for year 2. Okay, so this is 2010 year, 2011 year, 2012, or up to sale date equals, so we have 84,880 minus 16,976 gives us 67,904 for our diminished balance. Again, that minus that gives us that, times it by 20% equals 13,581. However, we sold it on the 30th of September, so we need to apportion that. So we times that by 3 on 12. We owned it for 3 months out of the year. So our depreciation for that period becomes 3,395. Okay. And then the jet ski. So what you'll be doing is as quickly as you possibly can, once you've redone the classification on your exam paper, you'd just be doing these quick calculations quickly, just scribbling them down on the bottom of a sheet of paper, wherever you can find the space to quickly just jot down these calculations so that you can refer to them in your report. You're trying to be as quick as possible, just handwriting down these calculations on your exam paper so that you've got them there so you can refer to them later. Jet ski calcs, we're saying that okay, 3,000 is going to come out of here and 880 is going to go back up, and that our original cost is now going to become 50,880. So those calculations, so for 2000 and, what are we talking about, 2010 year, we're going to have 50,880 times 30% for this asset equals 15,264. And 2011 year is going to be 50,880 minus 15,264 should give us 35,616 times 30% rate gives us 10,685. Okay, so that's our depreciation. So we're going to be comparing those. Okay, for the powerboat, we're going to be comparing these new calcs to these ones here for the powerboat, and likewise for the jet ski, we're going to be comparing these figures here to these calculations that we've just made here with our new adjusted figures. Okay, so that answers then our 3 questions. So we're making notes just on our exam paper. I'll give you the tip now, guys. I've stretched perusal time on the exam from 5 to 10 minutes. So if you just got a little bit more time to play around, I'll let you, during perusal time, to make notes on the exam paper and to highlight and underline relevant points. So you can kind of, if you've got time in perusal, you can start on these calculations, whatever strategy you use, but you're going to have 10 minutes now as opposed to 5. Okay, so let's move on. Got our rough calcs there. Now, with our report, we're going to have an introduction and a conclusion, and these are going to be our headings. So, first of all, when we're doing this question, I would go and answer our 3 questions, do that analysis, answer these questions, jot down the notes on the exam paper, try and do these calculations as quickly as you possibly can. Then with your report, okay, we want a heading. Report for Top Spot Holiday Resort. Okay, we want that heading at the top. Then from our headings that were given on our task sheet, go and just on our report quickly jot down our headings. Never mind the text that I've already got in here and the colors. Go and get our headings down, and we're going to sign off with your name. Sign yourself off as junior accountant. Okay, so key elements of our report, go and do the shell of our report first. Report name, get those headings down from our task sheet, sign off, and then we're ready to move on. Okay, so we need an introduction. The introduction, we've got a handout. It's attached to this one. You guys should have this in this file that you were given in that revision folder. Our introduction should tell us these things: who the report's for, what's the purpose of the report, and what will you be covering in the report. Now, you've all got a copy of the Grayson-Grunwald solution, so you can see what's required between this solution here for TopSpot and also Grayson-Grunwald. So, with those 3 dot points in mind, okay, the owners of TopSpot Holiday Resort have requested this report based on the information contained in the business's property, plant and equipment registers. At the start here, state property, plant and equipment in full, and then abbreviate it as PPE, so then you can refer to it as PPE throughout the rest of your report, so you don't have to write this all the time throughout your report. The PPE data will be analysed for accuracy, and various recommendations will be made in relation to the cost allocation concept, correct recording of capital and revenue expenditure, the most appropriate methods to use when calculating depreciation for various assets, and the calculation of depreciation. The resultant effect that these issues have on the business's profit will also be analysed and discussed. So this sentence here is just really an elaboration on, we're going to be providing analysis and recommendations based on that that, and that. Oh, and that. Okay, so that's where that information is coming from for the intro. Hopefully that seems fair enough. The main gist, okay, this is I&E. Do not neglect it on your exam. Make sure you give this, I would try and give this at least 45 minutes in your exam. Okay, it's to give yourself a decent shot of getting this done. I know that you've got to balance it up with the other questions as well, the other parts, but try and give this more than, give it at least 45 minutes, because this is marking the I&E criteria on this exam. If you don't do this part of the exam, you'll get an E for I&E, which we don't want. You need to give this task a decent chunk of time. Okay, what's with the highlighting, you ask? The main focus of this question is about interpretation and evaluation. The bits that I've highlighted in yellow are essentially regurgitating theory. So they're not massive contributors to your marks in an I&E criteria. So if you are strapped for time, the bits that you really need to focus on are the green bits. Okay, so you need an intro and you need a conclusion. Okay, so hopefully you can practice these. They're fairly generic and you can pump them out. They don't have to be as long as mine. Mine are reasonably lengthy, but they're, because we can see the total document here is 1,042 words. Okay, obviously you're not writing 1,042 words. My responses are guidance only, but for a report you need to have a basic intro and a basic conclusion. We need to do this section of the report, and this is regurgitation of theory, essentially. However, it is addressing the question that they have on their task sheet. Okay, they're concerned with where and how to record the cash that they set aside to replace these assets at the end of their use. So essentially you are analyzing and applying, because in that paragraph you are answering this question. So maybe I might rethink that and highlight that green, because you are, like I said, addressing that that question. So straight from the text, straight from your handout, theoretical handout that you were given, straight from the Grayson-Grunwald solution. Okay, the process of calculating and recording depreciation is a cost allocation process, as it diminishes the value of assets in the records of business via journal entries. This process does not set aside cash for the process. This process does not set aside cash for the process. Oh, geez, haven't proofread it yet. This process does not set aside cash for the replacement of the asset at the end of its useful life. By claiming a deduction for depreciation in the income statement, profit on the business is reduced each year, okay, because depreciation is an expense, and this profit reduction is then retained in the business, equal to the values written off. Sorry, just had to get my wording correct here. By claiming a deduction for depreciation in the income statement, profit of the business is reduced each year, and this profit reduction allows funds to be retained in the business equal to the values written off of those assets. Depreciation merely reflects the declining value of non-current assets as those assets' useful purpose for business diminishes over time, such as for cars and equipment. Okay, but the key point here is we are not specifically setting aside cash. We are just diminishing the value of assets via journal entry. Okay. This yellow bit here, regurgitation of theory. And like I said, if you're strapped for time, the green bit is the bit that you need to focus on. This is the analysis. Okay? But the theoretical aspect really does help set the scene. And ideally, I would like it in there. But if you're strapped for time, this is the important stuff that I need. This is where you demonstrate to me that you can interpret a PPE and apply your knowledge to it. Okay, so the theoretical bit, we've defined capital expenditures. They're significant costs that result in the acquisition and installation of an asset whose useful life will extend over more than one accounting period. All items of capital expenditure should be recorded in asset accounts and added to the cost of the initial purchase and depreciated over its useful life. Okay, that's the theoretical bit about capital expenditure. So then we go on and apply it. From analysing the PPE registers of Top Spot Holiday Resort, capital expenditure has been correctly treated in one instance where the additional seats have been correctly added to the cost of the powerboat, and we looked at that before. However, insurance during transit is a cost incurred in the acquisition and installation of the boat. Therefore, it is a capital expenditure and needs to be added to the overall cost of the powerboat. The same also applies to the safety harness for the jet ski, and that quick sentence just says, yes, we also need to treat the safety harness as capital expenditure and add to the overall cost of the jet ski. Okay, so this is what I want, this analysis and recommendation. Okay, this is the important stuff. So same again for revenue expenditure. We go and set the scene with the theoretical aspect. Okay, revenue expenditure, costs that are consumed in one accounting period spent in order to maintain a non-current asset in its efficient working condition. These costs are matched against revenue earned by those assets to arrive at the business profit for the period. Analyze. So again, this is the important stuff here. After analysing the PPEs, revenue expenditure has mostly been classified correctly. However, the yearly insurance premium on the jet ski, as the name suggests, will be used up with one accounting period and therefore should be classified as revenue expenditure and not capital. This item of $3,000 should be removed from the overall cost of the asset. Okay, so analyse the PPE, state what the issue is, and then what should happen with that amount. Okay, seem fair enough? Again, the green stuff's the important stuff. If you're strapped for time, this is the stuff that I need. Okay, again, yellow and green, theoretical aspects, important stuff. The theoretical aspects used to set the scene, demonstrate your understanding. This is the important application under an I&E criteria. So straight line method is preferred for assets where the service provided by those assets is fairly evenly spread out over the life of the asset. Therefore, the straight line method is more suited to assets such as furniture and buildings. Diminishing balance method is used to calculate depreciation, aims to write off more depreciation early in an asset's life, an amount which decreases as the asset ages. This is in line with assets, particularly with moving components, which will be efficient and require few repairs early in their life, but as they age will require more repairs and replacement parts. This leads to an overall evening out of the charges against revenue over the life of the asset. That is, high depreciation, low repairs early in the asset life, and low depreciation, high repair later in the life. And so based on that, therefore, the diminishing balance method is most appropriate for the assets of this business, being the powerboat and jet ski, as both possess mechanical moving parts and will require gradually more repairs as those assets age. This is the important stuff. This is your application to this particular business. Right. Okay. And I guess this is the slightly harder stuff. Oh, I've gone from methods. I need to scroll back up and we look at calculation of depreciation. So we've gone and done our calculations over here. Okay, we've scribbled them down on our exam paper. So in our text, calculation of depreciation. Based on the analysis of both PPEs, with the methods of depreciation chosen, the formulas and calculations have been applied correctly. Okay. However, by applying the changes relating to revenue and capital expenditure noted previously, as well as applying the diminishing value method to the powerboat, different results would be achieved. Firstly, for the powerboat, by a correct classification of costs and applying the correct method, depreciation for the first year would be 21,220, 16,976, and that's these calculations here that we've identified. So just go and spell that out in the text. For the jet ski, by correctly allocating capital and revenue expenditure, the original cost becomes 50,880, depreciation in the first year becomes 15,264 and 10,685, again, as we separately identified over here. Seem fair enough? I hope. You can't answer me back. No. Let's move on. So with that there, with these changes, classification from capital to revenue expenditure, vice versa, by the changes that we've now made to, or the resultant changes to depreciation, we then examine, right, what's the effect that this is going to have on our business's profit? Okay, so the effect on profit from discrepancies identified above is that for the powerboat, firstly, by classifying the insurance during transit as capital rather than revenue, our expenses claimed are reduced. Because previously, by having it as a revenue expenditure, we are claiming that full 1,100. We're claiming that full amount in that financial year. We're not gradually writing it off like we would when we depreciate it. We're claiming as an expense that full 1,100. So by reclassifying it as capital and adding it to the original cost of the asset rather than revenue, our expenses claimed are reduced by that amount, and as a result, revenue minus expenses, our expenses have decreased, our profit therefore is going to go up by that same amount, being $1,100. Hope that makes sense. If it doesn't, email me, come and see me. I can explain it further. The difference between depreciation claimed on the PPE and the correct amount calculated above arrives at a reduction of depreciation claimed of 1,530, and you can spell out the difference between depreciation and the PPE and the depreciation that you've calculated. So reduction of 1,530 in the 2010 year, reduction of 5,774. Okay, there's the calculation there in 2011, and 2,293 up to the date of sale. These expense reductions all have the effect of increasing the business profit in those years. Okay, we reduce expenses, therefore profit increases. For the jet ski, from the calculations on the PPE and those correct amounts shown above, 2010 would see depreciation decrease by 636. Okay, and then we're comparing depreciation on PPE versus what we've now calculated. We've got a reduction of 636 for that first year and 445 in the second year. As above, these reductions in depreciation expense would have the effect of increasing the business profit in those years. Also, going on, reclassifying the yearly insurance as revenue expenditure will see it claimed in full and will reduce profit by $3,000 in the 2010 year, with the opposite being the case by moving the 880 safety harness out of revenue expenditure and into the asset's total cost. Hopefully, with the way I've spelled that out, that makes a bit of sense, okay, and what I'm expecting in your analysis and comparison in this section of the report. So that's all the nuts and bolts of that. Okay, I wrote this all out in full previously and just reading through it because you didn't need to watch me type it and hit backspace 5 million times and then narrate hitting the backspace. Conclusion, just sum up. Okay, so in future, by doing all of these things, the business will need to follow the definitions and characteristics of both revenue and capital expenditure so that those items might be classified correctly. The business should also more carefully select the most appropriate method of depreciation for assets of the business and double-check depreciation calculations. This report details the impact on profit when these issues are incorrectly treated, so being more meticulous or careful around these issues will ensure that profit is reported correctly for the business going forward. That's just a nice little wrap-up, and essentially a wrap-up around these key questions here. Okay, because this is the ultimately what we are answering in our report. And that's it. Like I said, my response here is 1,036 words. The analysis and interpretation where you demonstrate that to me is the important stuff that I'm looking for, not so much the theory. So try and get this application down first. If you have more time, go back and embellish it with a little bit of theory to demonstrate your understanding. Okay, and I hope that makes sense. Do I have anything else to add? With your study, guys, you've got these here as a guide. You've got the Grace and Grunwald solution. You've got my little tutorial video for this here, which just lets you know what I'm thinking, how to approach it, and how to get it down on paper. So maybe for practice, go back and start with a clean slate for Top Spot and Grace and Grunwald for that matter, and just practice it yourself. Get it down speed-wise, those depreciation calculations, getting your thoughts down quickly, and maybe quickly punching out an introduction, punching out a conclusion, punching out this paragraph here, because they're all just givens. They're just things that you need to just go blah out on paper without even doing any analysis and interpretation. You need to get those down. So practice those, and then yeah, start, like I said, start with a clean slate for this one. Put my my response and my tutorial off the side. They're there if you need them to clarify things. Just start with a clean slate and just practice getting it down on paper yourself. Okay? Anyway, that's it from me. Over and out. I hope this helps.